there's been a certain number of challenges for First Republic that have become public since they released earnings on Monday. And one of them is that they need to sell assets. I think we had written a report on Tuesday, saying they need to do the mother of all pivots. And one of the things they need to do was shrink the balance sheet. And what they have on there, not really much of a credit risk, right? We're talking residential mortgages, high net worth people, and government securities. The issue is that the current market value of those assets are lower than when they were originated. And that gap, it shows up as a mark on the loans, and whoever would buy the loans or those securities then has to inherit that gap in their equity. And the issue with that is, in an environment where banks are being encouraged to maintain capital levels or grow capital levels into a potentially softening economic environment, it's a tough pill for a buyer to swallow and take on those loans while fully knowing well that they're going to be lowering their own capital ratios.
Tim, so as we know, CNBC reporting that First Republic likely headed to FDIC receivership. Can First Republic survive?
Well, unless there's an asset sale and a follow-on equity raise to support their own capital levels, make up for the losses that they would incur on the sale of the assets, it's unlikely. It's unlikely. And based on all the reporting, the things I'm hearing as well, that there is that standstill between what First Republic believes they need to sell the assets at in order to survive and what a buyer is willing to buy them at. And so far, they're not closing that gap in a fast enough manner, unfortunately.